time to bring in our panel, talk all about the markets, give a preview of next week. Lots of earnings in focus. Shay Boloor, Chief Market Strategist, the Futurum Group. David Dietze, Managing Principal, Senior Portfolio Strategist at PPAC Private Wealth Management. Great to see you both. David, I'll start with you. Big picture, how are you feeling about earnings so far, and what are you watching for next week? Is it Tesla?
Yeah, absolutely. Well, so far, I think it's coming up roses here. We've had about 12% of the S&P report, and on average, 84% of those companies have beaten expectations, which is much better than average. On the other hand, of course, with stocks knocking on the door of all-time highs here, we do need to make sure that expectations are kept in check. Perfect example, Nicole's today, we heard from Amex, Netflix, and 3M. They've all three beat the street, but the stocks are down today, partly, I think, because the expectations, the whisper numbers exceeded what was actually delivered.
What does that mean for Tesla for next week? Quickly, David.
Tesla's going to be tough. They're going to be down double digits from a year ago, although slightly up sequentially. And they've got some very intractable problems. Obviously, I think the two key ones is the brand tarnishment, given the tangle with the president. And of course, another big problem is the BYD over in China, which is beating them to the punch with better performing cars and lower costs in terms of the EV market. And those are two big hurdles that Elon's going to have to discuss in the earnings call.
And then also, Shay, what do you think about earnings season thus far and Tesla next week?
Yeah, I mean, specifically for Tesla, the narrative is bigger than the actual print. So Tesla's obviously going to report a really tough quarter. Deliveries are going to be down around low teens year over year. EPS is supposed to fall around 25%. Honestly, Elon might just skip Q2 guidance altogether, but none of that really matters if the narrative regains altitude. All eyes are going to be on FSD and Optimus. And we at Futurum believe that Optimus could be Tesla's second biggest business in the next couple of years. And that market is the biggest TAM of mankind history, where we expect it to be a multi-trillion-dollar opportunity in the next 10 years. And even if the timeline on when the execution is the variable in the calculus of whether or not to invest in Tesla, we do think the inevitability of that happening has to be factored into your decision, because Elon always delivers. The timeline is a little iffy, but we do believe that using conservative assumptions, Optimus could just be a $500-600 billion opportunity. And right now, Tesla's trading at a $1 trillion market cap. So we do think there's some room. However, this is not an earnings story anymore. And I do believe that Elon's going to kind of shine light on what the future company is going to be like, not what the company was.
What name do you like for next week, Shay, that you think might be a buy?
Yeah, I believe Intel is an interesting name to monitor, because I think street expectations are near a rock bottom. Flat EPS, sequential revenue decline. Intel already proved last quarter it can't surprise, and the new CEO has been very aggressive on his cost-cutting and operational discipline that might show up again next week. However, how Intel fits in the new digital economy relies entirely on their foundry pitch via 18A delivering. So I think that it's not going to just be about 18A performance. It's going to be about trust. Panther Lake will be the make it or break it internal use case. If it performs, customers will take notice and we might see some order flow. If it doesn't, Intel might remain its own best customer again. But I do want to add additional color that the big, beautiful bill that Trump was able to pass, Intel could see tax credits increasing up to 35%. That might offset a lot of the lagging margins in their business right now. That is something that might be priced in next week's print.
And then also we have GE Vernova. I mean, we saw last round this week, we saw GE Aerospace at 25-year highs, came out with some good numbers. I know it sold off afterwards. I mean, we talked about the whisper numbers and some high expectations, but the stock's done so well. And then for GE Vernova, you see that this stock in 1 year is up 216%, hovering around highs. David, what do you think about this one? What does it need to move higher? Will it move higher? I see a $620 target from at least one analyst.
Yeah, well, so they're in the sweet spot of what's going on in this country where because of the need for these AI data centers, we need more and more electricity. They're helping bring out the grid. They're in the wind, they're in the electrification, but this has not gone unnoticed by the street. As you point out, the stock has tripled in the last year. The earnings per share now is, the PE is now at 77 times. So I think the upside, should they beat the fondest expectations, could be worse than the downside. And of course, some of their big markets include Europe and include Canada. So tariffs are an issue for them as well. So although we love what the company's doing, we love its operational excellence, we just think it's gone too far too quickly. So we'd be very cautious on this name at this point.
What other names? Do you like Intel, by the way, David?
So, I agree with our other guest. The stock is down by about 33% over the last 12 months. We do have a new CEO there who I think has thrown the immediate prior results under the bus to set himself up for success going forward here. They are lagging in terms of the AI competition with, of course, Taiwan Semi and, of course, NVIDIA. But, from a valuation point of view, you got to give it some credit. So it's trading at about $100 million versus $4 trillion for NVIDIA. In other words, NVIDIA is 40 times more expensive. Gee, you would think that NVIDIA could put something like Intel right into its pocket, antitrust concerns left alone. So I think there is a chance for a positive surprise there. Plus, we've seen big short interest in Intel. So if they do beat the street, then a lot of investors are going to go in and cover those shorts, and you can get a really nice pop in that stock.
Yeah, we have GM, Coca-Cola, Lockheed Martin, as well, names to watch here. Shay, pick one. Is there one that you like in that group?
Among that group, I got to go with Lockheed Martin. I do believe that the defense budget will be evolving. That's why one of our favorite picks at Futurum is Palantir, who is essentially the operating system of AI. As the DoD budget does evolve, it's going a lot towards the Palantirs of the world. However, Lockheed Martin will still benefit from the incremental bump on the defense budget, because even though we have this sandbox of risk assigned on the tariffs, geopolitical tensions is not going away anytime soon. It might even escalate as time goes on. And we do believe that national security is going to be the biggest rock among this administration. So I do think Lockheed Martin will get some continued flow in that budget as well.
Okay, how about you? What do you think? You had Lockheed Martin, General Motors, and one more that I can't remember right now. David.
Yeah, I also like Lockheed Martin. It's got a nice PEG ratio. In other words, it should see 8 to 10% growth as far as the eye can foresee, but it's only about 17 times earnings, well under the market multiple. And of course, its technology is second to none. And of course, as we know, defense is so important. Of course, 70% of their business does come from the U.S. government, so they're going to twist and turn a little bit as the political winds change. I guess, the safest bet, of course, is Coca-Cola, which just seems to kind of meander along in low single-digit growth. They're going to have a little bit of a tailwind because the dollar has fallen in the last 6 months. But can that continue? And I think the problem is trading at well over a market multiple for a company that's growing very, very slowly. It's going to be interesting to see what they see as the impact of shifting more of their production to cane sugar from high fructose corn syrup. What's that going to do? And how well will that be embraced by customers? That will be very interesting to hear on the earnings call.
David, yes or no? Do we cross 6,500 this year?
Yeah, I do. We got a lot of tailwinds here. I think.
Okay. Shay, do we cross 6,500 this week? Yes or no?
Yes, we do. AI Party is the main event, and it's continuing strong.
Shay Boloor and David Dietze. I wish I had another hour because I love our conversations.